So let's get right to it. Evan Lucas from IG in Melbourne is joining us. Evan, let's start by talking about the obvious, the ANZ result, cash profit. What do you make of the headline number?
Yeah, having a very, very quick look, and unfortunately it's only been out since around about 10 to 8, so it's been very short. Headline number, in terms of the statutory number that some people report, looks quite good. Now, the reason for it is that they did have their trustee sell out. So you need to look at the numbers that they normally report to everybody, which is the cash profit. So that was a beat on estimates, quite nicely too. So the estimates had been $705 billion, and it's coming in at 7.12. So it is a good beat, strong beat there in terms of what's going on. And I think, again, looking into it on a regional basis, it's where the drive's coming from, and that remains Australia. And it has been one area they have championed. It's certainly what we saw in that sort of semi-release that we accidentally got at the start of the week, and that's where most of it's come from. Having a look also at New Zealand, they were also quite impressed with what's going on there as well, similar to what we heard out of NAB yesterday. So that was very good to see. Net interest margins were ever so slightly better than expected, so they've come in at 2.12 versus estimates of around about 2.11. Now, that is also a fairly reasonable thing to see. It is, however, lower than the first half, so the first half came in at 2.15. So they are continuing, like what we've seen from NAB, what I expect to see from Westpac, and also way back in August when we got CBAs, that they're continuing to have to probably squeeze margins a little bit to remain sort of fairly competitive and maintain margin share. So that's the only part I got out of that. But again, they're looking at their retail numbers up with regards to actually their capital. So retail capital is up. Wholesale funding is still going okay. So that's what I got out of it. Only disappointing part will probably be institutional banking, which was disappointing in terms of what I can read out of the very quick look that I had at it. There will be questions also about the Asia Pacific. It was a little bit flat as well. Specific what's going on in Asia, it wasn't as strong as some had expected.
Yeah, and of course investors always keenly watching any of the Asian comments coming from the bank, with CEO Mike Smith saying that the phase of high investment in Asia is largely complete, that the bank is seeing a greater share of Asia-led revenue growth translate into profit. So the fact that ANZ entered a trading halt earlier this week, that a bit of this number, you know, some of these numbers were foreshadowed, that's sort of an old story, done and dusted?
Yeah, it is a bit. I mean, the other thing that may come out of it, Nadine, is the fact that they could look at the fact that revenue was at the lower end of their range, so it came in at 4% growth. They'd expected between 4.5 and sort of 5.5, so that may be something to harp on about. But yes, I agree, most of this is probably already factored in. Most people had expected ANZ to come out with a good result, and it is, as I said, a very good result. You've already alluded to the fact that it is a record, but I don't know if you'll get a real good kick out of it. Dividend was in line, so that's why I think you might just find it's a bit of a flattened number. Right,
okay. Now, how about Macquarie? I don't know if you've had a chance to nut into that result, half-yearly result, 35% rise.
Apologies, I haven't.
No, not at all.
Apologies, I haven't. It's come out just as I came online. I did see that the headline numbers, the 35% rise, they are alluding to the fact that obviously they've got, particularly that their fixed interest commodities and currencies part is doing very well, and their broking arm is doing very well. They do allude to the fact that they remain fairly cautious about the outlook for trading, and that's why at the moment I haven't got more into it than that, because I was reading what was going on that number. Sorry about that.
No, fair enough, Evan. We put you on the spot enough. Let's talk about what happened in the U.S. overnight, because it seems to me as if the moves on U.S. markets through the overnight period really an endorsement of how the U.S. Fed is viewing not only the economy, but also the sentiment that we're getting from some of these company reports. I mean, it does appear as if this justifies the U.S. Fed pulling back on QE. The question now, does any sort of the market moves that we've seen, the GDP read, justify the expectation that perhaps interest rates will rise sooner rather than later in the States?
Yeah, and that's the interesting take out of it. I had a look at the GDP figures, and headline, they look really, really strong. 3.5, very, very strong beat on forecast. Most people actually expected to come in at 3. And again, yes, I completely agree with the fact that the Fed is probably reading it very closely. They made no allusion to the fact that there's global growth fears. And that's probably what I've seen from the brokers this morning, that they're trying to sort of draw the conclusion that in that GDP figure, exports are absolutely outstanding, and that in a global economy where things are a little bit sluggish, things are slowing down out of Europe, that maybe that won't come into Q4 and Q1 2015 next year. So that's what I've heard. I've heard a little bit of pessimism, but it's very, very good. And I think looking at what we have a look at here, which is the swaps market, also the interest rate markets and what's going on there, they are really sharpening their calls for Q2 next year. So that is one thing, and we are heading into the end of the year. We are now obviously pretty much 8 weeks away, let's be honest, that next year we will see tightening in the US, and that's basically the conclusion people are drawing. And how do we handle it? And the trading over the last 24 hours is very clear that the US is still the major bright spot. You know, Visa is a standout story. That is a huge way to sort of gauge consumer confidence. If you're spending on credit, then you are very, very confident in what's going on. And that was a standout story. 10% move up in Visa. So you've probably got to, as you've already alluded to, the Dow is obviously a price-weighted index, and Visa is the biggest heavy hitter there. That's why it was such a big move in the Dow. But it did drag the S&P with it, and that, I think, is a really key story, is that consumer growth, consumer spending, consumer confidence in the US is there, and Visa is a key indication of that. And that's why I think we are now going to see a little bit more of, you know, optimism from standing on its own 2 feet, and why the Fed, yes, will be a story to watch, but maybe not as vulnerable as what some people had been alluding to, probably for the last 9 to maybe even as much as 12 months before we came into this October meeting.
Yeah, really interesting times. Very interesting for the Australian dollar as well. I mean, we saw broad-based strength in the US dollar, hitting a 3-week high against a basket of currencies, 3.5-week high against the yen, for a bit of a different reason. But I don't, you know, enlighten me why we're watching the Australian dollar show continued strength, and in fact trading higher in early Asia-Pacific trade than its close on Thursday, given the US dollar strength.
Yes, and that's what we're trying to work out too. I mean, if you look at what's going on in the Aussie dollar on the fundamental basis, it should be grinding lower, and that's what you'd expect. Again, reading what I've seen this morning from the brokers, there are a few people actually telling you to close out your short call on the Aussie dollar US dollar pair, and looking at going into the S&P, and you know, I've seen that from Goldman Sachs, I've seen that from UBS as well. So that's very interesting, because that suggests that maybe there is a chance that there will be money coming back into the country. We saw when we did get our pullback that a lot of US dollars, a lot of yen flew out of this country as people locked in profit, was a little bit concerned around the yield trade. So maybe on a short interim basis that you are going to get that consolidation around that 87 handle. That's where we've seen a lot of support. And again, last night back up to 88. So what they're also talking about is that when we do start to see rates in the US move, you will get that grind lower. But on a short to interim basis, and I'm talking about the next 4 weeks, there is a real consensus out there from the brokers that 87 cents is going to be where we hold, and hold for a while, because it will become attractive for US and also Japanese investors to come back into this economy.
Interesting. All right. Let's talk about the market today. We've mentioned the banks. Obviously, we'll be watching ANZ, Macquarie. Materials space not doing well yesterday, but we did see the price of iron ore ticking up through the overnight period. I guess against that, though, price of gold falling, oil continuing to decline, really, you know, that decline accelerating on the back of that US dollar strength. So where are the sort of points that we're looking for as this market opens?
Look, from what we see from the SPY, from also the market that we create, we do see ourselves higher. It's around about 20 points. We are coming to an interesting sort of crossover as well. We keep rejecting the on a technical basis the 61.8% retracement of that last pullback we just had. It actually sits at 54.80, so we got there almost yesterday, 4 points lower. So if we can break through it, then we are on a really good footing. We will get probably good news again from the banks. They have continued to move up. We do have them going ex-dividend, so that's the only sort of, you know, thing to be aware of. But it looks like a positive move. Looking into London, BHP and Rio were positive over there. That's maybe a good lead to see. Commodities, barring sort of gold and oil, as you alluded to, as a whole basket, we're actually up. So we do see positiveness today. I just don't know if you're going to get a really big kick out of what we saw out of the US like we did last night. Technically, we do keep hitting resistance at around about 5,500 points. Okay, so we will watch that 5,500 level. Evan, we will chat to you about that later, no doubt. Thanks for joining us. Thanks, Nadine.
Evan Lucas from IG getting us across all we need to know, and we're keeping him on his toes as well.